Students, good morning. Today we are in our 32nd class on accounting. The topic, the continuation of the topic which has been done in the last 3 days, that is final accounts of non-profit earning organization, that is income and expenditure account and the balance sheet. So today I think it will be the last class on this topic, okay? We have discussed a lot and I would like to request my friends to go through the topic and go on practicing. The number of books have been given as reference. So consult the book, correct the problem and solve the problems accordingly. And right now today I am taking a comprehensive problem on this. Okay, just you read the problem first. So it is the information given for any organization. Say in the books of Royal Club. Royal Club. Here, the particulars given you see. It is receipts and payments account has been given. Opening balance, subscription, 18, 19, 20, admission fees, locker rent, interest on government securities. Then is the precise and how the treatments have to be made. I would like to take up a bit later on. Now sports equipment purchase on 1, 10, 19, 30,000. Postage and stationery, salaries and wages, upkeep of ground, electric charges, tournament expenses and the balance sheet. Balance. Clear? The fixed assets of the club on 1st January 2019 included the following: sports equipment 40,000, furniture 6,000, 10% government securities 16,000, and club ground outer base 25,000. Now what has been asked? You have been asked to prepare income and expenditure account of Protik Boys Club. Anyway, it is Protik Boys Club. We consider the Protik Boys Club for the year ended 31st December 2019, and a balance sheet at that date. After taking into account the following information, the additional information given: a subscription for 2019 collected in 2018 1,500. Subscription for 2019 outstanding for 1,000, and depreciation to be provided at 15% per annum, mandate 15% per annum on sports equipment and 7.5% per annum on furniture. Clear? So there is many things which is not being stated, but you have to take them out for the purpose of our treatment. Now I am coming one after another. To see. So you have finally you have to prepare two things. One is income and expenditure account for the year 2019 and balance sheet as of 31st 12/19. But I have told you yesterday, if you want to prepare the balance sheet or closing balance sheet, you must have the opening capital fund. And how to find it out? So you have to find it out. Okay, you have to calculate that amount. The opening balance, the capital fund, is the results of the opening assets minus the opening liabilities. Okay, you prepare a statement, total opening assets total, these and these and these and total, and then less opening liabilities, these and that. So the difference will be the capital fund. That may be a statement. Okay, there is statement there. Okay, the total assets, opening assets, then say what are the names and the amount and the total. Then opening liabilities, name of the liabilities and total, and the difference will be the capital fund. You may do it. Okay, this is those who are not very compact, they may prepare this one. But what we should do, I have told you, opening capital fund will be found out with the help of opening balance sheet. Okay, so that is why, although you have been asked to prepare two accounts, one is income and expenditure account and the other one is balance sheet, closing balance sheet, but for the solution of the problem, we have to make some working note, and this working note, first working note includes opening balance sheet. So for solving this problem, I have made the pro forma, 3 pro forma, one income and expenditure account which is which basically forms part of your solution and of the closing balance sheet. Okay, these are the two IT documents. But this document, opening balance sheet, I have made the pro forma in order to find out the opening capital fund. Clear? Any problem? I think no. There should be no. So now consider this one. Closing balance sheet, opening balance of cash. Yesterday I have told you it is the opening cash. Okay, so it should go to the opening balance sheet. Yes, in hand. How much it is? 7,600. So I am preparing simultaneously. Okay, please take into account. I am making it simultaneously. So opening cash, where it should go? Opening cash is your opening. It will go to the balance sheet, opening balance sheet. Now consider the subscription. Here subscription, we have got three categories. You have received the total subscription of 2,000, 37,000 and 3,000. So you have received 42,000. You have received 42,000. So opening, there is the subscription, you have received subscription of how much? 42,000 this year. But out of that, 1,800 relates to 2018. It means, what happened? At the inaugural part, at the inaugural day, on the first of the opening date of this year, you had that amount of asset, okay? You have that amount of asset outstanding. So it is an accrued subscription, okay, accrued subscription, and it should be treated as an asset. Clear? And that thing we have done yesterday. Clear? So it was accrued in the last year. It was accrued in the last year. Clear? Because the date has been, the members have got the services, but they have not paid. They have not paid their subscription. So it is your asset. So it should be in the opening balance sheet. I am writing a subscription. Sorry, SEC and accrued subscription. How much it is? It is 2,000. So it is your opening asset. Clear? Now I think you have received subscription of how much? In 1937,000. It will come over here. You just follow how I am going to answer. You have received 37,000. Now here 2020, that means you have received some advance subscription. You have not paid any service, but you have already received the subscription. So it is your advance subscription. Any advance income is your liability. So I am writing over here advance subscription. It is 3,000. I am again repeating opening subscription, the subscription amounting to rupees 2018 which you have received. Here. Now the subscription which has been received 2018, it is clear that it was in the opening, it was your accrued subscription. Okay, accrued subscription, that means Bokia, that is you have not received, so you have received this year. So last year it was your asset. Okay, and this year you have received the subscription for rupees 3,000. Subscription for rupees 3,000 for 2020. So it is your liability. You have paid you have not paid the service, but you have received the amount. So it is your liability. Clear? and for 19 we have got 57,000. So it has come over here. Okay. Then you may ask me, sir, why have you written it over here? Because it is the inner column, and the information we have gone through suggests that there are something. Okay, I am considering. Okay, now thinking. Subscription for 2019 collected in 2018. Clear? Take it. In 2018, you had some accrued subscription and you have some advance subscription. Okay, the subscription of 2019 was received in 2018. So it was your what type of subscription? It is your advance subscription. And advance subscription here I have told you is a liability. So it is the opening liability. Advance subscription. How much? 1,500. Now this year, so if you received it in the last year, but it is the income of this year. Okay. So last year it was deducted and this year it will be added. And received in 2018. How much? It is 1,500. Now take it. Again, subscription for rupees 2019, outstanding rupees 1,000. So this year it is accrued subscription. Okay, the subscription which has been due but not received. So it will be your asset. Accrued subscription. How much it is? It is 1,000. Clear? And it should be added. Accrued or outstanding. Accrued in 2001. How much? So it is total 37, 39. Clear? Yesterday we made some modification, the treatment likes less subscription received in the previous year and that year in that way. But here it is clearly stated, it has been demarcated separately. So no question of making that type of adjustment. Now 2018 we have received in this year. It means in the last year it was our accrued, it was an asset. So at the opening date it was an asset and it has gone to the balance sheet, opening balance sheet. This year 2019 it is over here and we have received advance subscription of how much? 3,000. Also that 3,000 is your liability and it has come over here. Clear? Now some treatment for this year in 2018 you have received the subscription of rupees 1,500 for 19. Okay, so it is an income of this year. So it has been stated over here, and that was our opening liability, and that has been stated over here. Clear? So then comes subscription for 2019, outstanding how much? 1,000 has been added. So the subscription part has gone. Now admission fees. Now the question of admission fee. Admission fee, how many times admission fees are given? Admission fee only once. So it should be treated as a capital income. Okay. So it will not come over there, and it is better to add it to capital fund. Clear? So it is as you given. I am telling you, friend, one thing, just very, very important. There are three types of income which may be revenue, which may be income. Number one, admission. It may, some say, sir, we are admitting students every year, admitting members every year. So it is recurring expenditure. But mind it, from the point of view of the organization, it is recurring. But from the point of view of the particular member concerned, how many times he gives the admission fee? He gives the admission fee once for all, so it is capital. But what you have to do, you treat this item as per the direction given. But if no direction is given, you can do. You may think it as a revenue income. You may think it as a capital income. You may think that 50% should be revenuized 50% should be capital. In that case, whatever you do, you give a working note. It is presumed, it is assumed that the admission fee in our case, it is assumed that admission fee is capital in nature. Clear? And since it is capital in nature, it should add to the capital fund. Clear? And same treatment in case of entrance fees, I have already told you, and also in case of donation. That may be that 50% of the entrance fee should be capitalized, 50% should be treated as a revenue. That can be 100% should be revenue. Okay, no problem. Then treat over here. 100% should be capital. Then and the state go to the capital fund. Clear? So this is the working aspects. So more and more practice will help you making the things clear and solving the problem in a very, very minute form. Clear? So here I am considering the capital income and it will go to the capital fund. Now, locker rent 1000. Locker rent is very often the organizations have the locker rent that is used by many other persons and they give the rent. So locker rent is an income. Clear? Locker rent. Locker rent 1000. Clear? And then interest on government security 1200 you have received. By interest. Interest on GS and government securities. You have received how much? 1200 received. But mind it, here something is stated over here, you see. %, government securities. Just consider it. Consider the point. 10% government securities. 10% government security at the opening date. What does it mean? 10% when it is used at the before, when it is used before the term government security, it is the percent, that is this security gives birth of income at the rate of 10%. Now, what should be the income? At the opening date, your balance is 16,000. So all through the year you have generated how much? 1,600. But how much you have received? 200. 1,200. So it is accrued. And accrued. $400. So it is 1,600. Now this is your income, okay, and this is income, and again it is your asset because income earned but not received. So income earned but not received is always your asset. So we will write it over here. Accrued interest on government securities. 400. Clear? So thus government security case is gone. Then this part one. Now consider sports equipment 30,000 purchase. So it will go where? It will go straight to your balance sheet. Clear? Now you can do one thing. Now I am completing this part. Sports equipment 40,000 and purchased 30,000. What is the total? Opening sports equipment. How much? Sports equipment. It is 30,000. So it is your opening asset. Now what are the opening assets? Furniture will be 6,000. Furniture 6,000. So 10% government securities 16,000. So these are the opening assets and club ground. Club ground how much? 25,000. So these are the opening assets, and opening assets should go to opening balance sheet. Any problem? Achha. So what are the opening assets? Sports equipment 40,000.
So you have written 30,000.
Oh, it is 40,000. Sports equipment 40,000. Furniture 6,000. Government security 16,000. And clerk number 5,000. And here we have got the opening asset. This one was 7,600 opening cash. Clear? And now regarding subscription, and I have already written approved subscription 2,000. Okay, which has been received this year. Clear? Now then, sports equipment to be 30,000 purchased. So in the closing balance sheet, how much it will be? Sports equipment. Opening balance, how much it is? 40,000. And add purchase, how much it is purchased? 30,000. So what should be the closing? The closing amount is 70,000. Clear? The closing amount is 70,000. Now think, something is written over here. Depreciation provided at the rate of 15% on sports equipment. This is very, very important. Consider it minutely. Depreciation on sports equipment. Depreciation on. You have got two parts of sports equipment: 40,000 and 30,000. There. How much it is? The total amount is 70,000. And you have to charge depreciation at the rate of 15%. So, would you charge on total 70,000? What I have told you, if P per annum is not given, in that case you may charge the depreciation on this. Exactly on 70,000. But here it has been specifically mentioned per annum, and the date of purchase has already been given. Clear? So this 40,000 which was at the opening balance, the depreciation was 15% is 6,000. Clear? So it is the depreciation on the opening sports equipment. Clear? Depreciation. Now the 30,000 is the purchase. It is the purchase, and the time dimension should be considered. Okay. So for the opening amount, opening balance, on the opening balance you have to charge the for the full year, and since per annum is given, so on 15,000 we have charged for the 12 months, and on this 30,000 we should charge for how many months? On one thing, that is October, November and December. So we have to charge 15% for 3 months. Okay, 3 by 12. So how much it is? It is 4. Clear? Now just what will be the calculation? How much? One is so it is 1,125. Clear? So what will be the total depreciation? Total depreciation is 6,000 plus 1,125. Clear? Have you got it? So the time dimension has been considered because it is written at the rate of 15% per annum. Now it is easy for you because it has been stated that the sports equipment purchase on 110. That means how many months you have considered? It has been considered. It has been used for how many months? 3 months. October, November, December. So we have charged depreciation for 3 months. Okay. Now there may be some problem if it is not given. Purchase date is not mentioned. Then you may, there are three alternatives. You may think that it was purchased on the opening date, so you have to charge for the whole year. If you say no sir, we will not charge, I think that the sports equipment purchase was the last date, so no depreciation, yesterday I have shown you, but someone said, no sir, I think it has been done in the middle of the year, so on the average period for 6 months. Clear? But since it is clearly given for 3 months, so we have to have depreciation for 3 months. So this is depreciation of this. I am writing over here, less depreciation. Depreciation. Now this is, you must see the working note, okay? You have to refer this. please refer to working note number 2. Clear? Working note number 2, because you have to calculate it. Depreciation, you have to write in detail. Calculation of depreciation. Okay. On rupees 40,000 for the full year, 6,000 depreciation at the rate of 15%. And on rupees 30,000 for 3 months. This is this much. So total 7,125. So it is 62,875. Clear? Absolutely. Okay, any problem? And I have written, although we should write depreciation in the latter part, still, as we are solving this one, I am writing it over here, okay? To depreciation on sports equipment. Depreciation on sports equipment at the rate of 15%. How much it is? 7,125. 7,125. Clear? Achha. Then I am completing the depreciation part. Okay. Now, on furniture, we should consider it later on. Then postage and stationery. To postage, it is postage and stationery. And stationery is your expense. And how much it is? Postage and stationery 700. Clear? Then salaries and wages 5,000. Anything due? No. To salary and wages. How much? 5,000. Any amount of salary or wages due should be added as outstanding salary, and it will be liability, and it will come over here. And any amount of salary and wages paid in advance will be deducted, and it will come over here as an asset. Okay? Achha. Then by upkeep of ground, this is upkeep of ground, there is a maintenance of the ground, so upkeep of ground. Upkeep of ground, it is 1,000. Electric charges 2,300. Okay. Electric charges. Electric charges 2,300. And then tournament expenses 8,000. Okay. And the balance amount 8,800. So it will be the closing balance. Cash balance 8,800. Clear? Now there are two other items. Okay, that is furniture. Furniture, opening furniture, how much? 6,000. And what is the amount of depreciation? 7.5%. Okay. Now what should be the depreciation? Furniture less depreciation 7.5% per annum. Furniture how much? 6,000. Okay. So it should be 450, no? Clear? And another asset is still there, another two assets. 10% government security. 10% government security. 16,000. And club ground 25. Clear? And oh sorry, one thing, furniture. Now depreciation on furniture at the rate of 7.5%. It is 4.3. 7575. It is 700. It is 3,005. It is 5,000. It is 1,000. It is 2,300, and it is 8,000. Clear? Understood? So this is the solution of this part. Okay. Now just add it. Cost spent. What is the amount? It is 39, 40, 41, 42,100, right? You go on calculating any difference should be divided to me 42,100. It is 7, 5, 3, 17, 15, 1, 8, 11, 12, 17, 24. How much it is? 5, 6. Okay. It is 2 surplus excess of income, over expenditure. Okay. Now, so all the things we have treated. Now we have to complete this. Asset opening accrued subscription, accrued interest on securities. Okay. Sports equipment less depreciation, working loan. Now cash this much, furniture less depreciation, 10% government security, 10% club down. So this is the total amount, total of assets. Now the total of liability, what we are getting? We are getting advance of 3,000. We have not count the capital fund, but advance pay and admission fee. Some admission fees over there. So this 4,000 should be added to this 4,000, and the profit and the surplus 17,525. Clear? Now what is the opening capital? Opening capital, as I have told you, it is the difference between the opening assets and the opening liability. So what is the total? It is 600. It is 96,000. Okay. 6, 7 to 9, 9, 21, 26. Okay. 6, 7, 8, 9. Okay. Now the difference is 96,600, and the difference is 96,600. 95,100. Okay, that is capital fund. Capital fund opening, huh? Opening. You should be balancing figure, because you have got this figure after balancing. Okay, this is balancing figure. This is our balancing figure. So it is 96,400. What it is? 625. One lakh 17,000. Just you see. Okay or not? 5. It is 5. Okay. 7 times 2. 1. 6. 6 are 6, 40, 22, 26, 26. Clear? 26.
1,19,000. 119.
Plus 26.
Sir.
What is the problem? You should correct it. Make it
1,19,000.
1,19,000. How is the difference of 1,000? 1,19,000. 4,7,525. Okay. Approved subscription, how much? Any difference over there, you see? It is 42,000. 2,100, 7, 5. Is it agree? Let's see if just to think it. Postage how much? 5,000. Upkeep of ground 1,000. Electric charge 2,000. 300. Tournament expenses 8,000. Oh. Tournament expenses 8,800 na? Oh. 8,800. So the figure will be changing. Seven five. Three. Okay. Again, now what is the difference? 2, 5, 10. Oh, no. Tournament,
What's the balance?
tournament, okay, it's 8. Did the thing right initially, so it is 8,000. Okay, So what is the total?
24,575.
Huh?
24,575.
7, 55. Okay.
24.
2, 10, 12, 13, 18, 30.
So 4. 24. Sub is 24. 24.
Clear? And now it is 42,200, no? 100. Okay, you just take totally 39. And outstanding accrued. Yes.
So 17,525. 17,525.
So similar. So what it is? 5, 2, 5. No. 6 to 5. 1,70,000. It is how much? 1,80,000, no? Now how is the difference? How is the difference being taken? Accrued subscription. Oh, subscription for 2019 outstanding. Right, okay. 1,000 is outstanding, it has been an asset. It was subscription for 2019 to collect in 2018, that has gone over there. Depreciation. What is the difference? 1,000 is being paid, but it is the amount of difference. It is the difference of amount of interest, accrued interest for 4,400. Advance subscription. For advance subscription, how much it was? Advance subscription 20,000. Okay, that is okay. Advance subscription for 2019 1,500. Subscription of what subscription outstanding subscription. It is outstanding subscription. Advance subscription. The level is 80,000. It is okay. And you see that whether the total amount is agreed or not, you check it. There go. It is 6,000. No. Just you see whether the total of this part is okay or not. Just make the total. Where are the difference? 1,000 we are getting the difference of 1,000. Salary outstanding 2,000. Outstanding salary 1,000 for 19. Depreciation 15%. You see whether we get any problem in calculation of depreciation. Depreciation how much? Depreciation 40,000, 15%, it is 6,000. Clear? And on the balance of 30,000, 50,000 it is 6,000. 30,000. 15% depreciation of it is 15%. And now? For the only ones. 1 4 1 4. 1 4. It is 1 2 5. The depreciation should be 6,000. 6,000. Sports equipment, how much sports equipment we had? We had 30,000, we are charging how much? 30,000 and 15%. Okay. Okay, it is. Now there is some problem. I think there is no problem in treatment, but there is bigger. Just you check it first. Whether the addition has been made right or not. Any problem? 72, 30. Just depreciation, okay, government security, 25%. It is okay. Cassinet, how much? 7,600. Approved. Advanced subscription. Approved subscription 2,000. Okay. Approved subscription. It is 7,000, 3,000. Approved advanced. Yeah, approved this one. Subscription for 2,000 outstanding. 1,000. What is the difference you see? No? Local rent how much? Electric charges 2,300. Permanent expenses no. And 5,000 and this 7,575. What is the here it is 91,100, no?
Yes.
Are you sure? Okay. Clear? Then how much it is? 625. Okay. 119. Clear? So friends, this is the completion of the problem. Some wrong and putting of the information has held me our class for 5 minutes. Okay, so friends, what's the problem? I did the difference between here it is one and you are getting 1 to 0, but it is because of this one. It is 95,000. Opening capital is 75,100, but I don't. Me, like a beautiful accountant, have written it over here in 96,000. That is the difference. Okay. So friends, so this is the completion of the problem. I am recapping the problem once again. Just rediscussing the problem. Okay, fine. We have only 5 minutes in hand, and within 5 minutes I have to go rapidly. So friends, this is the problem, and from this, with the help of this problem, we have to prepare 2 accounts: income and expenditure account, repeatedly, and balance sheet, which we have done yesterday. And in order to get the balance sheet ready, we need the opening capital. Okay, the opening capital is not given over here. The problem is a beautiful problem. Total information has been given. Full information has been given. But what you have to do, you have to find out. You search for the information which you need for the purpose of preparation of these 2 accounts. First of all, I am trying to take up this one. In order to get the capital fund to complete the balance sheet, closing balance sheet, we have to have the opening capital fund. So in order to find out the opening capital fund, yesterday I told, and yesterday I solved one problem, and we have to open in working note and one opening balance sheet, and we have made 3 performance: income and expenditure account, balance sheet, closing balance sheet, opening. Now I am taking up one after another. Opening, just from here I am doing. Okay, it is the balance. It is the balance, opening balance. Where it will go, opening balance will go to the opening balance. It is 7,600. You see it properly. So then subscription 2018. It is the year of 2019, and we have received rupees 2,000 in this year. So it was outstanding in the last year. So in the last year it was our asset. Okay, it was accrued subscription in 2018. Also that has been written over. It is an accrued subscription is your asset. Clear? Then subscription 2019, it should come directly to income and expenditure account. Okay. Now there are some adjustments are needed. Some treatment of adjustments as given in the information, additional information. Then 2020. So this is the year 2019, and we have received 2,000 for received 3,000 for 2020. So it is our opening liability. Okay, because you have not paid the service, but you have already received the cash. So it is our opening liability, 3,000, and it has gone to the opening balance sheet. Closing balance sheet. Here, so it is our closing liability. Now admission fee, I have already told you there are 3 items in income and expenditure account. In case of the final accounts of non-trading concern, these items are in admission fees, entrance fees, and donation. They have both the character, revenue character, capital character. So if you what type of payment? If it is a revenue character, then it should go straight to income expenditure account. If it is absolutely in capital character, then it will go straight to balance sheet. It will be added to the closing capital fund. Okay, but if nothing is given, in that case you will make the necessary adjustment and necessary assumption. You think that 50% capital, so added to 50% capital and 50% over here. You think absolutely revenue, so it should go over here, income expenditure account. You think it knows that it is absolutely capital in nature, it will go to the balance sheet, closing balance sheet, and it will be added to capital fund. But whatever you do, give money, do as per information given. And if no information given clearly, then you treat in your own way. But you have to give necessary working note. And here admission fee 4,000 has nothing has been stated, and we have taken it as capital receipts, and we have added it to our closing capital fund. Okay, admission fee 4,000 here. So this is very important item. And locker rent income, it has gone over there. Interest to government security 1,200 you have received. But the information states that 10% government security at the opening of the year is 16,000. 10% government security. What does it mean? It means this security generates further amount gets income of 10%. So what should be the total income? 10% of 16,000, 1,600. But you have received 400, 1,200. So 400 is outstanding, accrued. So interest has been given or written over here 1,200, and 400 is accrued. And that 400 is your asset, and it has gone to the asset side of the balance sheet, closing balance sheet. Clear? So friends, this part has gone. Now, now, so far as subscription is concerned, there are other information subscription for 2019, collected in 2019. So in the previous year you collected 1,500 for this year. So it is an income of this year, okay, 1,500. And this 1,500 was the asset, 1,500. Subscription for that was the liability in the opening liability of the organization, because you did not give any service, but you have already received the amount, so it is your liability. It has gone in the opening capital. Clear? Then subscription outstanding, it has been added over here, and it is an accrued, so it has come over there. Clear? Now, so for asset equipment, sports equipment 30,000, and opening it is 60,000. This sports equipment 40,000 should go to the opening balance sheet, okay? And in the closing balance sheet it is 40,000 and 30,000, total 70,000. And depreciation has been charged at the rate of 15%. And I have already told you how to calculate the depreciation. The depreciation, and in the closing balance sheet it is opening 30, addition 30, opening 40, addition 30, and depreciation is done. Okay? Then post-stationery expense. Salaries and wages expense, upkeep of ground expense, electric charges expense, tournament expense, and balance sheet. It is the closing balance of asset, cash, and it has gone in the balance sheet. Okay, clear. And now, what are the other issues? Depreciation. I have already told you how the depreciation has to be provided for. The opening furniture is 6,000. It has been depreciated at 7.5% per annum. This amount of depreciation has been shown over here. Over here. Okay, clear. And 450. So this is the total presentation. And now after the difference between income and expenses give us the surplus, and that surplus has been added to the capital fund. Okay. Now. The opening, we have, with the help of opening balance sheet, we have got the opening capital fund, cash in hand, accrued interest, sports equipment, furniture given over there at the top, and 10% raw material closing and club ground. And the difference is 95,100. And our closing capital fund will be 95,100, opening balance, admission fee that is treated as a capital receipt, and the surplus that has been generated this year was 17525. So this is this much. So the total agreement is balance sheet total is 119,625, and surplus is this much. Okay, so that is the solution to the problem, friends. And I think this is sufficient for you. And if you want to have further studies, much more advanced studies, you go on practicing. And whatever the problem, you may contact me personally, or you may send any message to me. Okay, now go through the topic minutely, very minutely. That is a very important area concerned. Okay, so thank you, friend. We have wasted from 5 minutes because of the wrong use of the figure. Okay, now it has been agreed. So have a nice preparation on this topic. Go through beautifully, and tomorrow I will take up adjustment on this.